Hi traders, you're welcome back to the Forex Geek channel. In this video, we are just going to look at the best candlestick pattern, bearish candlestick to be precise, okay? We're going to be looking at the best bearish candlestick patterns. If you want to spot potential downward moves in the market, mastering these patterns will give you a clear edge. All right? So now, why bearish candlestick patterns? Why do they matter? Well, candlestick patterns are one of the oldest and most reliable ways to analyze price action. Okay, a bearish candlestick pattern signals that sellers are gaining control, often after a period of upward movement. Now, knowing how to spot these patterns can help you identify possible reversals or continuation setups where the price could continue downward. All right. So now we are actually going to be starting with the bearish engulfing pattern. All right. So now let's start with one of the most powerful, which is the bearish engulfing. Okay. So the bearish engulfing pattern forms when a small bullish candle is immediately followed by a larger bearish candle. All right. So you can see this is an example of a bearish engulfing, right? When a small bullish candle is followed by a larger bearish candle that completely engulfs the previous one. So it shows strong selling pressure entering the market and often signals the beginning of a downward move. All right. So next we have shooting star. All right. So now shooting star candlestick pattern is one that has a small body near the bottom and a long wick on top. You can see it could be a green candle or a red candle. The main thing is that there's going to be a small body at the bottom or near the bottom, and then you have a long wick above. So this is called a shooting star. All right. This is a single candle pattern that has a small body near the bottom and a long wick on top. It typically appears after an upward trend and suggests that buyers tried to push the price higher, but sellers quickly took control and drove it back down. Now, the shooting star is a clear warning of possible bearish pressure. All right. You can see an example here of shooting star at work. After the shooting star, you can see that there was a bearish reversal. All right. Now, the next bearish candlestick pattern we're going to be looking at is the evening star. All right. Now, the evening star is another important one. It is a 3-candle formation that starts with a strong bullish candle. Right? It starts with a strong bullish candle, and then it's followed by a small indecisive candle and ends with a strong bearish candle. So it's a 3-candle pattern, 3-candlestick pattern. The evening star signals a shift in momentum from buyers to sellers, okay? Often marking a reversal at the top of an uptrend. All right. Now, the next candlestick pattern we're going to be looking at is the dark cloud cover. All right, the dark cloud cover. So now this is a 2-candle pattern where the first candle is bullish, but the second candle opens above the first candle and then closes deep into the body of the first candle. So this shows that buyers lost control quickly and sellers are taking charge. Now, it is a strong reversal signal that traders use to watch for potential downward movement. Okay? Now, while these are some of the best candle, or rather best bearish candlestick patterns, you know, the bearish engulfing, the shooting star, the evening star, and the dark cloud cover. These are actually some of the best bearish candlestick patterns, right? They should never be used in isolation, nonetheless. Okay? You should always confirm them with context. Look for these patterns at resistance zones, all right, at the top of a trend. Okay, you want to look for these patterns around resistance zones at the top of a trend, or near key levels where price has reacted before. All right. You combine them with moving averages or other tools to confirm momentum. Now, one common mistake that traders make is spotting bearish candlestick patterns in the middle of a sideways market. You shouldn't do that. All right. And then you assume that a big drop will follow. If you have a sideways market, you have a market that is going sideways, consolidation, don't bother yourself looking for bearish or bullish candlestick pattern because it is a sideways market. You have to wait for a breakout first. Let the direction be clear. All right. So don't bother looking for bearish candlestick patterns within a sideways market. That is a mistake, right? Remember that context is everything. The pattern must appear in the right location to carry real weight. And where is the right location? There has to be a bearish candlestick pattern occurring after an upward move around the resistance zone. All right. So those are the areas where you should be looking out for the patterns. So to recap, the best bearish candlestick patterns to study and master are the bearish engulfing, shooting star, evening star, and dark cloud cover. These patterns reveal when sellers are stepping in and when market sentiment is turning bearish. If you found this guide useful, don't forget to like this video, subscribe, and hit the notification bell so you never miss more Forex trading strategies and candlestick tutorials. Thank you for watching, and I'll see you in the next one.